RBI Governor Sanjay Malhotra మాట్లాడుతున్నారు లైవ్ చూద్దాం.
On the 7th, 8th and 9th of April today to deliberate and decide on the policy repo rate. The global economic outlook is fast changing. The recent trade tariff related measures have exacerbated uncertainties, clouding the economic outlook across regions, posing new headwinds for global growth and inflation. Amidst this turbulence, the US dollar has weakened appreciably, bond yields have softened significantly, equity markets are correcting, and crude oil prices have fallen to their lowest in over 3 years. In fact, as we speak, it is about $60 to a barrel. Under these circumstances, central banks are navigating cautiously with signs of policy divergence across jurisdictions, each reflecting their own domestic priorities. The Indian economy has made steady progress towards the goals of price stability and sustained growth. On the inflation front, while the sharper than expected decline in food inflation has given us comfort and confidence, we remain vigilant to the possible risks from global uncertainties and weather disruptions. Growth is improving after a weak performance in the first half of the last financial year, 24-25, although it still remains lower than what we aspire for. And now I come to the decisions of the Monetary Policy Committee. After a detailed assessment of the evolving macroeconomic and financial conditions and outlook, the MPC voted unanimously to reduce the policy repo rate by 25 basis points to 6% with immediate effect. I repeat, the MPC voted unanimously to reduce the policy repo rate by 25 basis points to 6% with immediate effect. Consequently, the standing deposit facility, the SDF rate under the liquidity adjustment facility shall stand adjusted to 5.75%, and the marginal standing facility rate or the MSF rate and the bank rate shall stand adjusted to 6.25%. I shall now briefly set out the rationale for the decisions of the Monetary Policy Committee. The Monetary Policy Committee noted that the inflation is currently below the target. It is supported by a sharp fall in food inflation. Moreover, there is a decisive improvement in the inflation outlook. As per projections, there is now a greater confidence of a durable alignment of headline inflation with the target of 4% over a 12-month horizon. On the other hand, impeded by a challenging global environment, growth is still on a recovery path after an underwhelming performance in the first half of 24-25, which is the last fiscal. In such challenging global economic conditions, the benign inflation outlook and the moderate growth demand that the MPC continues to support growth. Accordingly, the MPC unanimously voted to reduce the policy repo rate by 25 basis points to 6%. Moreover, it also decided to change the stance from neutral to accommodative.